Hey everybody, Boris last from BK Forex. Welcome to our weekly Forex cycles for 7/7/7/13. We're next for the dollar rally. As always, trading foreign exchange on margin carries a high level of risk and obviously before all investors. I ask you to read this disclaimer very carefully. You should be aware of all risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. All right, let's take a look at the euro dollar first. Just bear with me here, because the dollar rally was really broad all across the spectrum last week. And as you can see, the euro is ending the week. This is the weekly chart, pretty much at the week's lows, around 28.28, with 2800 really very much in view as a possible near-term test. But the real test here is going to be this 2750, 2800 corridor. If we can't hold the lows here, this is going to be a very, very critical support. If we can't hold support here, it really begins to fall out of this longer-term support level. And it's actually sort of the low, I think, over here is around what, 27.21. So let's make it a broader corridor. Let's say 2800, 2700 corridor. And if we basically tumble through this 2700 support level, then it opens up the run all the way out to 2500 and possibly even all the way out to the lows of 2250, which would be a very significant, of course, decline for the euro, and pretty much show how much stronger the dollar rally is as we go into the near term. So the euro, if you look at it on a longer term chart, definitely looks like a very big distribution pattern. As a matter of fact, you could almost make a case that it's sort of a head and shoulders on the weekly here, with this part of the shoulder now being the key test to break to the downside. And the longer term support really comes in all the way from 2012 at the 120 level. So it'll be interesting to see how this develops. The top side right now, the near term resistance is 29, then 30. A recovery of 30 would really alleviate a lot of the near-term negative pressure. Put us more into a neutral position, put us more into a range-based position, which is the range being 2800 to around 3300 as the consolidation that's been happening really for the last month and a half. We are at a very critical junction point this week. If we press to the downside, take out the lows here, could really be a significant start of a possible fresh down leg for the euro, up leg for the dollar. To the dollar yen, the situation here is also very constructive, but perhaps not as definitive. And the reason why is because the dollar yen obviously is entering into the territory here of possible double top test at 103.40. And until we clear the 103.40, you have to basically operate on the assumption that the upside in dollar yen could be capped by this operating swing high. Furthermore, if you were to sort of run a trend line over here against this position, you'll see that the trend line resistance comes in around 102.50. So this 102.50, 103.50, in my opinion, is going to be a key congestion corridor. And if we can bust through that, then of course it opens up the prospect of possibly 105, maybe even 110 as we go forward. But in order for dollar yen to really assert a fresh leg up, we need to clear this 103.50 level significantly in order for us to feel confidence. Otherwise, you could have essentially a failure at double top, perhaps even a lower high failure, and a retest back down to hundreds, kind of a churn, which is something that we've had happen. One of the reasons why dollar yen chart isn't looking as constructive is simply because the correction in dollar yen was pretty vicious here. Now, typically in a large uptrend, you are going to get vicious corrections, but the correction did break the trend line, and therefore the recapture here is going to be a lot more significant. And that's why you really need to see the 103.50 taken out in order to clear the trend line resistance and to create fresh highs to give us confidence that we have a fresh up leg going up. Pound dollar just got hammered last week. It was really surprising, but of course the commentary from BOE just completely changed the character of pound dollar, despite the fact that the UK data has actually been consistently beating to the upside. So we took out the 150s. Now, of course, it's 148, very key support level. And I think that's going to be a big near-term support here, just as in the euro. This 27.28. In the pound, it's going to be the 47.48 level. That's really going to determine whether the pound is tumbling to fresh lows, or whether this is just simply a retest of a prior low, and potentially a double bottom formation. The moves were very stiff. You had really 3 weeks of just wholesale sell-offs. Generally, when you have that kind of a wholesale sell-off in the pound, as you can see, sometimes you get some consolidation and bounce back, but not always. You could have 1, 2, 3, 4, 5, 6 weeks of wholesale sell-off before you get some consolidation. But having said this, cable is really momentum driven to the downside. It'd be a brave man who wants to make a stance over here. But on the other hand, the stance here could be a very low risk proposition if you monitor your stops very carefully. In other words, if you're sort of taking a punt here that this may be a near term bottom with 47.50 as a stop, you may get lucky and you may actually get a strong bounce, because if there is a bounce coming, it definitely could be a pretty strong bounce given the very, very steep sell off that you've seen in the pound. Lastly, Aussie also coming in to very critical juncture here, this 90 level. 90 level has been, I think we have to go really far out here because 90 level has not been tested in quite a long time. Right here, about 2.5 years. 90 level broken does really opens up the prospect of a move all the way to 88.50, which is the true near-term support here, which would catch the move in Aussie dollar. But so far, 90 level holds, and we have to see just how strong this this downside move has been. One interesting thing, let me just go zoom back in here. If you're watching the Aussie, those who are perhaps Aussie bulls, this is very, very thin ray of hope. But what you can see here in the Aussie is that the level of contraction has been declining. So you had a huge decline 3 weeks ago, a small decline last week, even perhaps a little bit of a small decline this week. So the rate of change to the downside is starting to decrease, which means that the sellers are kind of getting tapped out. And perhaps there may be some bargain hunting here at 90, but still, if 90 is given, it does trip a lot of stops, and at the very least, I think it sees 89.50, perhaps even 89 as the week progresses. So, taking everything in overall stance here, I think we are certainly at some very, very important junctures here. Let's review the key levels because I think it's so important this week. The euro dollar, the key support here is 27, 2800. 27 gets given, we have a very likely probability of going to 2500. In dollar yen, 102.50 is the first key level that needs to be taken to the upside, but the real big level needs to be cleared is 103.50. 103.50 gets cleared, then it's clear sailing all the way up as dollar yen has a potential to make 105, perhaps even 110 on a longer term basis. With pound, it has been a steep and sharp sell-off, but 47.50 as a possible stop against the double bottom here, with a very, very tight stop and just basically a punt. This could be a bounce back. If 47.50 gets given, I think 4,500 clearly comes into view as momentum forces just simply overtake this thing and push us all the way lower. And with Aussie, the rate of decline is slowing. 90 may still be given. And perhaps a more interesting idea here to look at is on a relative basis level. I just want to pull up my Euro Aussie. What you can see here is that even if you do have a dollar rally continuation, perhaps it's not going to be as continuous against the Aussie as against the Euro. As you can see in the stall in the Euro Aussie, this 142.43 clearly presenting a stall here. And unless what's the level here? I think it's 44 basically. Unless 44 gets taken to the upside, the prospect of Euro Aussie seeing a little bit of a correction, perhaps back down to the 40s, perhaps even down into the 39s, is relatively strong. So even if you do get dollar strength, it may not be uniform across all pairs. It may actually be stronger against the euro than against the Aussie, therefore helping this Euro Aussie start correcting to the downside. That's the ideas for this week. A lot of interesting trades, a lot of interesting ideas for us to take a look at. This is Boris Schlossberg. I'm wishing you the best of luck and the best of trading.